Hello, everyone. My guest today is Adam Jackson. He's a software engineer turned tech entrepreneur and investor who started 4 VC-backed companies and an asset management company over the last 16 years. He's looking to create open, equitable marketplaces that use customer-focused technology to boost collaboration between users without the cost and friction of conventional channels. Adam, you ready to take us to the top?
Absolutely. Let's do it.
All right. Let's do it. Yeah. So make all that sort of real for us. Explain how a customer is using BrainTrust.
Sure. So BrainTrust is a global talent network that connects high-end experienced tech people like engineers, designers, product managers with Fortune 1000 US companies that desperately need this kind of talent and just can't hire them in-house. And especially now with COVID, where everyone's office is shut down and hiring is even harder. BrainTrust is especially filling this hole for enterprise companies that need to keep digital innovation moving forward.
Mm-hmm. Okay, so when I think of that, and I'm just learning about you obviously right now, but I think about sites like TopTal or sort of better versions of Fiverr or Upwork for more top tier talent. What are you doing different than TopTal?
Yeah. So matching talent and clients is not a new thing. What we're doing from a business model perspective is brand new, never been done. So the old model is when you run a two-sided marketplace, your job is to create a trusted transaction or place to transact, and then take as much of that transaction in the form of a fee as you can, right? And those fees could be 20, 25%. It could be all the way up to 50+% in talent marketplaces. That's where BrainTrust gets very unique. We charge a flat 0% fee to the talent side. So talent can come in, set their market rate, and earn 100% of that rate. And then a flat 10% fee to the clients. And so what this does is we're not trying to disrupt Upwork or Fiverr. Those are sites where you get a logo or a website. We're looking to build large, and facilitate building large software platforms, big projects, multi-million-dollar projects that could never touch a marketplace.
Mm-hmm. Okay, so let me try and break that down. Is BrainTrust exclusive for development talent or any kind of talent?
Today, it's just for product development talent. So we have engineers, UX designers, product managers, those kinds of people.
Okay. And so let's say a product manager that just got laid off from Airbnb in San Francisco wants to find work. They're now remote only. They list on BrainTrust. What might they list as their price?
Yeah, we actually have people who've been laid off from Airbnb and Uber and various other tech companies here in the Bay Area that have come on, created BrainTrust profiles, and then they can list whatever they feel like they want for a market rate. Most people's market rates are between, in the US, it's going to be more expensive, between $100 and $200 an hour. In other places around the world, it'll be cheaper than that.
Okay, but that's what I was like. It's an hourly rate. It's not like a salary or a monthly retainer. It's an hourly rate.
We start with hourly rates, but a lot of companies will come in to BrainTrust and say, look, we're going to want 10 data engineers, we're going to want 5 UX designers, and we're going to want them for indefinitely. So they'll go ahead and contract a monthly rate at that point.
I see. Okay. So let's say her name is Sarah. She's an ex-Airbnb product manager, lists at $200 an hour. Pepsi has a new project that's software oriented. They hire Sarah on their platform. They use her for 100 hours at $100 an hour. They now want to move to a full-time contract with her. What does that look like? Can Pepsi or Coke pull Sarah off your platform essentially?
They can, because in a lot of platforms will charge you steep penalties for pulling people off the platform. We don't care. The reason we charge very low fees and no penalties for leaving is because we're actually owned by our users. So it's not just me and a couple investors. Our users actually own the network. So we're fine if people get plucked off.
So let's talk about that, right? So there's a bit, I believe, of sort of a blockchain thesis here, right? Which is, look, I used to interview, in fact, I had the Shopin founder on right after he did an ICO, and I grilled the hell out of him. And my question I learned to always ask anyone doing an ICO is, what percent of the ICO did you convert to fiat after the ICO closed? And if they said anything greater than 20%, the fraud things are going off in my head. Sure enough, Shopin, when the number was 80%, and 2 days later, the SEC is coming down with 2 counts of fraud and he's in jail, right? So because they would sell the utility value of their token and then convert it to fiat makes no sense. So walk me through how you see sort of the BTrust token working from a utility and marketplace value perspective.
Yeah, absolutely. So, a lot to unpack there. We never have and never will sell tokens to the public. There's no reason to do that. The way our token works, and I'll start by saying it is not a payment layer. All the jobs done when your friend joins from Airbnb and does contracts with Pepsi, that's all done in cash. Okay, we don't need another payment layer right now. our token, the BrainTrust token, is used as an incentive mechanism. So we use it to reward people for building our network. What does that mean? That could mean actually coding and building the software for BrainTrust, but more likely it's inviting new talent, helping vet that talent. We have a peer-to-peer vetting system, so it's not just us vetting everybody, and inviting clients. So we've raised a modest seed round. We're not, most companies go raise hundreds of millions of dollars and they build out giant sales and marketing and product teams.
How much did you raise?
Money. We've raised $6 million so far.
Okay.
And so we actually, instead of hiring all those people in-house, we have our network do it for us, refer clients, refer talent, all those things. And we give them our token in exchange for that. And so our token is used as an incentive mechanism.
Now, they won't do that unless they sense inherent future value of the token. So you have to sell the story. Sell me. What's the story?
So here's the story. So let me back out to the real premise that makes us unique and different here. My co-founder and I, Gabe, we firmly believe that user-owned and controlled networks will grow faster and be more valuable than founder and investor-owned networks. Okay, so very different ownership paradigm here. And so how do you allow 10 million people in 50 countries to own and control a network, vote on the rules and all that stuff? Well, you just can't do it with shares of a Delaware C. It's physically impossible, right? It's logistically impossible. So we, instead of shares of stock, we use tokens. And these tokens are given out in proportion to people in proportion to the value they drive, inviting people, vetting people, bringing clients on. And the usefulness of that token is voting control of the network. Okay, so right now the fee schedule is really simple: 0% charge to talent, 10% charge to clients. People say like, well, why do people care about voting on network rules, right? It's like, well, I'll give you an example. Like, you remember last year when DoorDash rolled out this new feature where you can tip your Dasher cash after the delivery. Well, then, so they roll it for a year. DoorDash Inc. decides to book all those tips as revenue and basically steal the money, right? If DoorDash had been run like BrainTrust, where it was a user-owned and operated network and rules had to be approved by the users first, that money could have never been stolen. So that's the incentive to get our token and have influence over this platform you make a living on.
So just to be clear, it's not Bitcoin in the sense of a payment layer, but it is a contract sort of token, ERC20 token built on the Ethereum blockchain.
It's an ERC20 token built on the Ethereum blockchain. Exactly right.
Roger that. So you have to decide how many tokens there are at the beginning for people to compete for. And there has to be limited supply. Otherwise, if anyone can get them at any time, there's no value to them. So how many tokens did you start with?
We're gonna start with an initial supply of 250 million tokens. We can never print it anymore. Okay.
And just quickly, this is an aside, from a regulatory perspective, how do you actually set that limit? What do you do to register that or get it going?
Yeah. So this is just built into the smart contract, right? When you write your smart contract in Solidity and compile it and run it on Ethereum, one of the inputs is how many tokens are there ever allowed to be in existence. Once that contract is pushed to the blockchain, there's no changing it unless people decided to start over and we started from scratch on a different network. But that's locked into the blockchain. And that's what gives the token scarcity, right? That means I can't change my mind later and dilute everybody and dilute our members and that kind of thing. That's where the blockchain comes in, right? You just can't rewrite that. It's immutable. And that's why this is a new business model that couldn't have been done before blockchain tech.
This is what EOS was trying to do with their dApps idea, the kind of the decentralized application. They're trying to launch their own Facebook, where every time a user uploads their own comment or a picture, a selfie, they get a little bit of the new Facebook sort of token, so that Zuckerberg can't steal your data and sell to advertisers. So I think I definitely get that, but let's keep just digging here for a second, right? So on the day when you have these 250 million tokens to issue on day one, how do you decide how they get split up, or do they sit in a vault somewhere and no one owns any? And you start slowly doling them out?
Yeah, great question. So even today, before the live token is actually on the blockchain, we're still on testnet today. We actually have thousands of people working toward earning credits that will convert into our token, right? So we just keep track of them in a database. But these are people that are developers, designers, building marketers, people making introductions to clients. They're all earning credits that will convert into this token when we launch next year. So when we launch, a big portion of the tokens will already have been spoken for and will be distributed to these folks that have been helping us for 2 years now. The rest that have been unallocated will sit in treasury. And it's basically what you just described. It's this wallet that nobody can touch, that only the smart contract can give out to people who help build the network. And we basically distribute those tokens as bonuses for people who refer business. So Nathan, if you refer Microsoft to BrainTrust and you use your unique code, and Microsoft, that product manager signs up at Microsoft and Microsoft starts paying invoices, our protocol is going to reward you some percentage of that invoice as a bonus in perpetuity. For as long as Microsoft transacts, you're going to get that bonus every month, paid in token by our smart contracts.
Mm-hmm. Who controls, let's say someone brings in Microsoft who ends up over the next 10 years paying $10 million through BrainTrust. Who controls the multiple you're applying to the 10 million in fiat as it relates to the value of a new BTrust token? Are you rewarding 0.1% of 10 million and 0.1, and that fiat is the conversion to the BTrust token? Like how, because whoever controls that ratio really actually controls the dilutive network of the token issuance, right?
Exactly right. So what you're getting at here is if we're giving, let's say 1% of all transactions on the person you referred, let's say 1% belongs to you, the person who referred, that 1% that comes in as cash because Microsoft's paying its bills in US dollars. And so let's just say for round numbers, it's a $10,000 bonus that you're owed. The protocol will actually buy $10,000 worth of BrainTrust token on the open market and send it to you in the form of token. Now,
I see.
So then it doesn't matter what the price of BTrust is, right? It's the market determines that, right? So you may get a lot of BTrust or a few BTrust, but you're always going to get a reward denominated in US dollars.
So what's the day one market cap of the company? Is it the last round valuation you raised your fiat on, the VC round? Like who comes up with that? Because that is ultimately what sets the benchmark.
Ultimately, and the market will ultimately decide what that day one price is. The money we raised last year, or in 2018, we raised $6 million. It's on a convertible instrument, so it hasn't been priced yet.
What's the cap?
The cap is 33 cents per token, and so times 250 million, so about an $83 million network cap.
Is that the cap on the note you raised, the $6 million note you raised?
That's correct.
Holy crap! You did a note, $6 million note with an 80 million cap on it. That's the largest cap I've ever heard on a note.
And the reason for that is because you can never be diluted, right? So this is a fixed supply of tokens that we can never print any more of them. So, crypto investors are like, well, like if this labor marketplace is going to enable this whole new set of transactions that could never touch a traditional high fee marketplace, like maybe that's interesting, right? So it's an interesting valuation metric used in crypto networks.
How the hell did you convince? I assume this was True Ventures. Did True Ventures lead?
We actually, my own firm led the initial round.
Okay.
I helped start a firm called Cambrian, and so this project was spun out of Cambrian. It was a token economic paper looking for a category. And so, so we set the initial terms.
Got it. Okay. So it makes it a little easier to set the terms if it's essentially coming from your own firm. And to be clear also, if you ask any VC about FinVenture Capital's valuations, they will tell you FinVenture does very little in terms of getting appropriate valuations. They have very little sensitivity to valuations. They'll give you whatever sort of value you want. So you're really betting on a vision here. Obviously, the cap is what sets the initial price when you do bring the token to market, and that. So I'm just trying to think. One of the downsides to a lot of the ICOs was people would say there's a lot of old white males who are already rich VCs that are essentially buying the token to artificially inflate the price, or sometimes it was the company that had already raised VC dollars using their own money to buy it on ICO day to drive supply demand. So, I mean, is that a good or bad thing? And do you plan to do any of that?
Well, so, I mean, to be really clear, we'll never do an ICO, right? We're never going to sell tokens to the public. The only way you can get our token is to earn it, is to help us build the network, right?
Okay.
So we did raise $6 million from accredited, from VCs like you normally would. We're working on another round right now. We're just kicking it off where we'll raise from some more VCs, not a ton of money, by the way, because the project's actually profitable already. Mm-hmm. And then once the network publicly launches, we will allow tokens to be withdrawn, and then it's up to the secondary markets to be created. We're not an exchange. We're not going to facilitate buying and selling of our own token. It'll be on the exchanges to pick those up and create secondary liquidity if they so choose.
What's the VC investing in, though, if you're essentially arguing that the network owns the equity value of the business? I mean, this is where I think I love the idea of the network owning the business, but this is where it starts to turn gray for me. Is what is the value of the company that you're creating? How do you pay your developers to build the system in the first place?
Yeah. So let me zoom out to try to answer this question, because it is a new and weird thing. Yeah. Trust me, like you're not the only one to be like, wait a minute, Yeah. So I use the analogy of Ethereum. Ethereum is what's called a public good, right? It's this thing that's out there that no one person owns. It's completely decentralized. A lot of people own it. And what it does is it creates this whole new platform for smart contracts to exist and operate and be secure and be immutable. And that makes the world a better place. There's tons of people making money on Ethereum because Ethereum was generated, by people that wanted a public good to be there. And so you look at DeFi, there's tens of billions of dollars in DeFi right now. So BrainTrust is similar. We are building, I have a small for-profit company called Freelance Labs and I am just one of dozens of companies building BrainTrust as a public good, because all of our businesses collectively will be better when BrainTrust exists and is out there in the wild.
Mm-hmm. You haven't launched this sort of model yet today. Is there a leaderboard I can go see somewhere to see who of the network has earned the most credit so far?
Yeah, good question. We haven't published a public leaderboard yet, but it is on the roadmap.
So sure. You will make a public leaderboard?
Oh, yeah.
Interesting. Yeah. So what I'm thinking is I have an email list. Is it worth it for me to email my email list about BrainTrust? And it comes down to, well, how many tokens do I think I can earn? And what's the value of the token going to be when you finally launch it? And do I believe in you and your vision and this idea?
100%. So what we'll do, so we haven't publicly rolled this out yet, but we have what's called a connector program. That's the thing that pays out that percentage basis of everything you refer. And it's like an affiliate program on steroids.
Exactly. Right?
Yeah. And so once we open it up to the public, today it's still invite only. Once we open it to the public, you could sign up. Any one of your viewers could sign up, get your unique code, and then go send it anywhere you want. And anyone that signs up through that code is going to get permanent attribution to that.
And you have probably different weights for if they sign up a company versus a talent.
This is the cool part. Okay, so today it's all just you actually get no percentage for referring talent, because we have a lot of talent. You get 1% referring clients, but all two-sided marketplaces eventually become you're either supply constrained or you're demand constrained, and that may change every day, right? I mean, Uber has always been driver constrained. My last company, Doctor on Demand, was doctor constrained or was patient constrained until recently. Now we're doctor constrained, right? But it always goes back and forth. And so the algorithm built into our BrainTrust protocol is actually going to change the referral reward based on what we need more of. So let's say
surge pricing or reverse.
Exactly right. It's a reverse. So I'll give you an example. So Porsche, the car company, is one of our big customers on BrainTrust. Let's say they've got a big machine learning contract coming down the pipe, and they know they're going to need 10 TensorFlow engineers. That's a type of machine learning engineer. And BrainTrust only has 5. Well, so the software will actually see that job coming down the pike and say, okay, we're going to start with a 0.5% referral bonus for machine learning, TensorFlow. Okay, 2 days have gone by. All right, let's kick it up, 0.75. All right, and so the software will keep ratcheting up the reward until the roles get filled. What's awesome about that is instead of the value of the network is then given programmatically to whoever helped us build it. Right? Like not some employer, not some, stooge VC, sitting back, collecting all the value, right? It's the most fair way to build a two-sided marketplace.
Most smart business people say, if I could just get the right incentive plans in the right place, everything will be good. This token idea allows you to align incentives almost perfectly with the value the tool adds to the world. But here's the thing. If the bigger the reward, the more incentive there is to game it. Right, you become a honeypot in security terms, right? So if you increase the reward to get these ML engineers, I'm going to go figure out a way to get my grandma to set up a new Gmail account, and I'm going to make her look like she's Harvard grad who knows CS. I'm going to get her to sign up so I can earn the reward. So how do you make sure that stuff doesn't start to happen?
Well, your grandma better be good at TensorFlow because the only way you're going to get paid for her is if she gets paid invoices.
I see.
So it's cash in, cash out, right? It's once your referral starts actually getting paid invoices, that 10% fee we collect, I mentioned earlier, we collect it from the client. Part of that 10% fee goes to pay the VIG out to the people who referred.
Value add. What's VIG?
VIG is just a term for like a cut, right?
I see.
Cut.
I see. Yeah. Okay, real quick. So getting off the crypto stuff for a second, let's talk about economics today. You started the company in what year?
We started this it was summer of 2018.
2018. Okay, and what's your key KPI? Is it number of projects through the platform or how much GMV through the platform to date?
Yeah, so GSV, we call it gross service value, just same as GMV. GSV is our main KPI. We will do something around $2 million this year in 2020 of GSV.
And what does that convert to in terms of like total number of projects or total number of clients paying for that 2 million?
Yeah. Today we're at about probably 24 active transacting clients. It'll be 60, 70 by the end of the year. I think we have 200 or so active projects on the platform right now, and it's ramping. It's growing about 30% month over month right now.
That's interesting. And what do you define of actively transacting? At least $1 through the platform in 30 days or what?
Yeah. I mean, the smallest job we've ever done is probably 10 grand. The average job size around 55,000. Mm-hmm. And so, yeah, active means you paid an invoice this month.
Got it. And 2019, so 2 million this year, 2019, what'd you do?
Almost nothing. We were building most of 2019.
Okay. Got it.
We just started this. We got into private beta in Jan 2020. Let me funny story. Nice month in January, nice month in February, March. We see the lockdown hits. We see everybody hit the brakes at the same time. We're like, oh shit, like we're done. I mean, we're out. And then April sucked, down 55%. May was awful. And then in June, we started having clients pick up the phone and say, well, look, our stocks didn't go to zero like we thought they might in March, and like the world didn't explode.
And now the Fed is buying our ETFs. So we have cheap debt capital too.
Well, and they're like, well, look, and we still got to build these damn software projects, but now we're 3 months behind. So we saw this flood of new projects come onto the platform. And then we came out of stealth and they had some nice press last month, and that, made the flywheel turn even more. So it's sort of a hyper growth mode now.
Before sort of the 55% drop, or actually maybe not, even up till today, how much GSV through the platform so far this year?
This year we're at like around $750,000.
Okay, so 750. And so can I just multiply times 10%? You guys have made about 75 grand?
Yeah, that's the take on the platform. Exactly.
Interesting. So you'll still take that take once you launch the BrainTrust token, and that's how you'll feel like your engineer salaries to keep building the platform.
You got it. It's a very, very capital efficient platform, right? Because most of the people contributing are actually doing so in exchange for tokens, right? If you're going to build a user-owned network, like get your users involved early. And so it's a very, very low burn operation. That's why it's already profitable on the 6 million we raised 2 years ago.
Yeah. So you raised that 6 million, you've been building it for 2 years. Have you gone through, how much of that 6 million is still in the bank, or have you invested most of it?
Yeah, we have about 3.2 left.
Oh, wow. I mean, okay, that's plenty. But so you're profitable. What are you saving the money for?
Mostly onboarding, right? So if you're going to bring Nestle or Porsche or even NASA, we just signed a couple months ago. These guys don't self-serve, right? Mm-hmm. Like you need operations people to bring. You got to get through procurement, legal. So we only have 8 full-time employees, mind you.
Oh wow. Okay.
Yeah, most of the work being done is being done by engineers and designers and people on the platform. Even all our marketing is done by freelancers on the platform. But it's so like our OpEx internally, it's mostly operations.
Yeah. Like what are your total expenses right now per month in cash, not in like the conversion to BrainTrust tokens, just cash fiat?
Yeah. We burn about 85,000 a month right now. 80.
Okay. Wow. Okay. So wait, so how are you profitable today if your total revenue this year has been 75 grand?
We'll be profitable on the seed round. So our burn will become zero. We'll generate cash probably March, April next year.
Oh, I see. So you're still burning today, but before you run out of the 3.5,
any more money.
I see. Okay. So what you're burning through about 60, 70 grand a month right now, net burn?
About 85 net burn.
85. Yeah. Interesting. So let me ask you this. Why haven't you been able to convince your developers to save you cash to earn BrainTrust token or credit instead of getting paid by your fiat round, your round money?
Some of them do, some of them don't. It's a funny, like, and look, you can't use fake internet tokens to pay rent and buy food, right?
This is true.
We don't expect people to take full salary in this. Half of the core team doesn't take any salary at all. They're just doing, I mean, I'm doing it because it's my passion project, but others are doing it. Some people are doing it for all tokens. Some people are doing it for a mix. It's not my place to judge. Like, people need real money, and that's why you raise money.
How many engineers on the 8?
None. I'm the only technical person. So I'm the chief architect of the token and the platform. All of our engineers and product managers and designers are freelancers on BrainTrust.
Oh, fascinating. So see, I think entrepreneurs like you, and over the next 10 years, I think first of all, I love this idea. I mean, I'm trying to be devil's advocate and like poke at it as hard as I possibly can, but I haven't found like many weaknesses, obviously. But I mean, your ability, I mean, really what this comes down to, it's your ability to sell the vision. It's what people are going to fight for these tokens today because of the value they think it will have 10 years from now. And it's going to really come down to your ability to sell that.
Yeah, I mean, look, the people are earning credits toward this token that doesn't exist yet because they love the idea of calling the shots, of being in control of the marketplace that they rely on to make a living, right? Yeah. I mean, you've seen how this plays out. This plays out negatively in the gig economy. We're seeing it already, right? Like the gig economy, all the gig economy did was effectively lower the minimum wage from $12 to $5. That's Georgetown did a study on that. It made, the Uber IPO, $85 billion IPO, it made 5 guys here in San Francisco even richer, right? Deca billionaires. Meanwhile, a third of all Uber drivers live at or below the poverty line. Some of them live in the cars they use to deliver the service, right? They saw none of that value. They have no say over the rules. When surge pricing happens, Uber Inc. keeps it. When DoorDash keeps the tips, they have not. So we're building a new paradigm here to give that control back to the users, to give that value the middleman steals, give it back to the users.
Mm-hmm. And just quickly to touch on Uber, because it's just in the news and it's popular and everyone knows it. You could argue, I mean, what do you think Uber spent on building the technology over 7-8 years?
I mean, look, let's be fair. 10 years ago, a location-aware mobile app on a crappy iPhone 4, that was hard to do, for sure, right? I was a mobile developer back then. Look, maybe 10 years ago they spent $10 million on it. Today, me and you could get a case of Red Bull and do it in a weekend.
Yeah,
tech is trivial now. Right. It really is. Right. Like the value of a network is its people. Where are the drivers? Where are the riders? Right. If we were to steal Uber's database, that's the value. Uber app, we can knock that off in a weekend.
Adam, put your evil hat on for a second. I just realized we're way over time, but I've lost myself because I'm just intrigued. Put your evil hat on, okay? If you wanted to consolidate power in this new model where the network owns the token, I'm trying to think of how would you do that? As the guy that owns what, you own 60, 70, 80% of the company on the equity side?
Oh, no. First of all, there is no equity. It's only token, right?
But what did the investors invest in?
They bought tokens. They bought something that will convert into tokens called a SAFT.
Okay, I don't understand that. Explain to me how that works.
So convertible note converts into equity, right?
Yes, right? Yeah.
Or a SAFE. You've heard of the SAFE from IC, right? A simple agreement for future equity. A SAFT is a simple agreement for future tokens. Same thing. Except instead of you take out the equity and you put in the tokens. And so there's no equity cap table. There's only a token cap table. And so that's what the founders have. That's what the investors will have. And that's what all the users have. We're giving. It'll be something like 60% plus or minus of those of the total token supply. We're giving them to the users through that referral engine mostly that I described earlier. The founders and I, we have I think it's sub 15%. My co-founder and I.
Mm-hmm. The SAFT was done on an $85 million cap, correct?
83. Yeah.
83. Sorry. If the value of the network is not. It doesn't hit that cap, right? On launch day when you issue the token, those investors end up with the majority of the tokens and we're back to square one.
No. Good question. So they'll convert at a price and then the price will tank, right? So they'll own the same number of tokens. They'll just not be worth very much. It's a good point.
I guess what I'm trying to get at is what is the value the day you decide to issue the token?
It will have to be determined by the market that day. right?
But you're going to have 6 million basically you've already raised pumped into that already. So yeah, I don't understand that.
Yeah, it's a little tricky, and there's not a lot of great examples you can point to, but it will, on the day we publicly launch the token, people will withdraw it, secondary markets will be created, and the market will decide the price. I don't know if you follow the compound protocol on DeFi at all. Does that ring a bell?
I don't.
They just went through this exact and it can get rocky. Crypto's all about
what's it called?
volatility.
Compound what?
Compound finance. So they're the biggest protocol in DeFi, which is means decentralized finance. And they have a token called the comp token. Our token has a lot of similarities with that comp token.
Interesting.
Even though they're a bank and we're a labor network.
I mean, Adam, is this one of the reasons you're waiting to launch the token is you need to have more products going through the system so that you make sure it is valuable the day you issue the token? Otherwise, this whole thing tanks.
Absolutely. The reason we're taking our time, it will be 3 years old by the time this thing publicly launches ish. The most important thing is that the network can sustain itself by its own users, right? So I can't be in the middle anymore. Our team can't be pulling all the strings and calling all the shots. It has to be a real decentralized network where people care about what happens to it and are taking care of the network itself. And so we're like 2/3 the way there, but we've got some more work to go before this is a real self-sustaining thing. Just look at Ethereum, right? Nobody owns Ethereum. I mean, Vitalik is sort of the brainchild, but like he could go away and Ethereum is just fine, right? There's a lot of parties involved there. We're following the same path.
Yep. What are there any other weaknesses I haven't asked about?
Look, people, like, I think it's what I said earlier, like people have to care about what happens to BrainTrust. Other like people have to want this token because it represents control. And if they don't want it and they don't use BrainTrust, the thing goes to zero, right? I mean, it's as simple as that. It's like any other marketplace, right? Tokens don't matter. If a marketplace doesn't have users and GMV, then it just doesn't matter and it goes to zero. That's the same existential risk we have.
How many people, just unique people right now, own some portion of a credit for when this does go public?
Around 1,200 or so.
Okay. I mean, so, and most of them, because you said Vig earlier, they only get those credit things once a company actually pays for a piece of talent. So you have more people with credits than you have jobs completed, I believe. So how did that happen? Can 3 people get credit for the same referral?
No. So the way it happened is you can get credits, credit sort tokens. I'll just say tokens. You can get tokens for other things. So let's say you help us fill out a proposal for NASA, right? That's a real thing. Like you got these kind of like big government proposals. We'll give you tokens for helping us do that, right? That's real work. What if you said something nice about us on Twitter? We just launched a podcast Monday called The Way Work Should Work. And we get, people promoted us on Twitter and we gave them tokens for that.
Yep. Okay, got it. And you are setting the value right now. You just have to arbitrarily do it because there isn't a market yet. You're sort of setting the value of what that credit is for now.
We're not even saying what it's worth right now. We can't. We don't know. It hasn't been set by the market. It literally has no value right now. We're just saying it's useful. It's going to be useful in the future because 1 token equals 1 vote on our network. And so if, let's say, someone comes in and says, hey, we should raise the fees we charge talent to 25%. What do you think of that? Well, if enough talent own the tokens, then they'll vote no way. And so that's the reason to get and keep the token, is to have control over our network.
So when you launch the leaderboard, what will be the unit of measure after each numerical digit? Is it a percent? Is it a vote? Is it a dollar figure? What is it?
It'll be our token symbol, BTrust. It'll be I own 1,500 BTrust because, I did X number of things to help the network and now I'm holding that many tokens. But
right now, before you launch the token, the credit leaderboard, what does the credit say? Is it like 0.3% of the total voting pie that I own because the credits I've earned, or?
No, it'll just be a flat number of tokens. I mean, you could do the math. You could take that. You could do the percentage like
into
you're saying,
250.
Just divide it by 250 million.
I see. Yeah. Okay, sorry, we're way over. Let's wrap up here. Famous 5. Number 1, favorite business book.
This one, I would have to say Venture Deals by Brad Feld. Be smarter than your lawyer and your venture capitalist. I read this damn book after every round I've ever raised. I should have read it before every round I've ever raised. I've raised like 12 rounds of venture now for my life. Brad's the best.
All right. Number 2, is there a CEO you're following or studying?
I love, who I love right now is Jack Dorsey. The reason is he's one of the only billionaires who understands and admits that blockchain technology will undermine the two businesses he currently runs. He's even running a bounty right now for someone to create a user-controlled version of Twitter that
that's his
on
bio. That's his bio. He's trying to do it. The problem is he has shareholders. So how does he underscore the shareholder responsibility he has, but also try and replace himself?
He doesn't give a shit, right? He believes the truth over serving shareholders. That's why I'm not a socialist, right? I love money, I love capitalism, but I really respect Dorsey intellectually on that.
Should you sell all your Twitter stock right now? If you're listening to this,
I've never owned a share of Twitter stock.
If you're listening to this and someone owns Twitter stock, should you sell it right now?
I think you should sell all your stocks right now.
Fair enough.
We're the biggest bubble of our lifetimes. Don't own any stocks.
Yeah, I mean, look, the problem is like when you have the federal government printing money, and if it is going to keep going into ETFs, which has never happened before, I don't know why they want to become the next Japan, but if that's the path to creating wealth, then you have to be in the equity game to capture that wealth generation. That's part of the problem here. Anyways, whole nother conversation. Number 3, what's your favorite online tool for building your company?
I really dislike all of the online tools, so I'm just going to cop out and say Google Docs. It's the easiest damn thing to use. The other things, I feel like I'm enslaved by them.
Number 4, how many hours of sleep do you get every night?
5 to 6.
And situation, married, single, kids?
Married, twin 4-year-olds.
Oh, wow. What a fun time. That's cool. And how old are you?
Yeah, it's sorry, say again.
How old are you?
How are I? How old am I?
Old.
Oh, I just turned 40.
40. Okay, last question. What's something you wish you knew when you were 20?
What's something I wish I knew when I was 20? Be more patient. Let the game come to you.
Guys, I'm going to try and sum this up in a sentence. I don't know how I'm going to do it. BrainTrust is trying to essentially build a highly curated version of Fiverr where there is no CEO of Fiverr. The network, the talent and the people hiring the talent own tokens on the network. I'm getting the thumbs up, so this is working. They've processed right now about $2 million of GSV through the platform, $750,000 so far this year, hopefully $2 million by the end of the year. Once he proves that sort of volume through the platform in terms of employers hiring talent, he feels like he can do this sort of go live with a token next year where it'll have real market value, and the $6 million they've raised in traditional kind of currency like we think about it on a SAFT, right? Which will convert all that money to tokens. That's when that conversion will happen. We'll see what happens. You got to believe in the network. You got to believe in Adam's vision. Adam, we're rooting for you. Thanks for taking us to the top.
Thanks for having me, brother. Appreciate it.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it, and the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.